too. So it's at hffinancial.com/disclaimer. And I am an investment advisor. I do have a position in Tesla through stock. My clients have positions in stock and options through Tesla. I may be a bit biased. And so I not investment advice, not a recommendation to buy or sell, just sharing my thoughts and feelings today. And a lot of what I may be sharing might be opinion. I'm trying to make it as accurate as possible, though.
Yeah, I appreciate that. It's always a good reminder, especially when markets are as volatile as they are, that none of this is financial advice. Do your own research. We try to provide our analysis as evenly as possible. But yeah, we're both clearly biased. But anyway, welcome everybody to episode 50. It's a big milestone of going live with Good Soil. We've been doing this for almost a year now, so very honored to have Bradford Ferguson here as our guest host. Emmett is tied up this week, but I think he'll be back next week. For anyone who is not familiar with Bradford, and I think that's probably not very many of you, he's been kind of a staple in the Tesla community over the last couple of years, big sponsor of a lot of the different Tesla events, and really just, I think, a voice of wisdom when it comes to all things Tesla. So always a good voice to have on here. And Bradford, I know you and I have had a lot of conversations over the years, and it's good to do something like this in a more public forum. So welcome.
Yeah, super excited to be here. Right now, I'm in Hawaii, so it's
no wonder you're super excited to be here. That's a good spot to be.
It's pretty early in the morning here. It's 6:34 a.m. It's actually not too bad because we trained ourselves to wake up around 7 a.m. and that's 1 p.m. Eastern time. So you have most of the news of the day has already happened. It's already out. You're not waiting for everyone to wake up and all that stuff.
Yeah, and then you miss some of the market volatility in the beginning couple minutes. That's not a bad thing to miss either.
Yeah, even the news in Ukraine is. It says my mic's doing some strange things. Even the news in Ukraine is out already, so it's kind of a nice time to wake up so I can catch up on all the news.
Yeah, well, appreciate you waking up a bit extra early for us. Usually what we do with these live streams, we start off with macro, which of course is kind of driving the narrative of everything these days. So the big news last week was the May inflation data came out on Friday, which was significantly worse than I think the market was expecting. Definitely led to the sell-off we saw on Friday and continued with a vengeance yesterday. What was your kind of thought when you saw that inflation data come in and the market's reaction to it?
I definitely didn't like seeing a seeming acceleration in the data. But subsequently to that, I'm just hearing anecdotally some things cooling off, like home builders in Austin are having to do price cuts. There was something like on some housing under 700,000, they've had to do $75,000 price cuts on some new houses. So some potential overbuilding going on there. Used car prices are coming down. But it might be another head fake. Lumber prices have come down, but oil stays high. I'd say my long-term concern with housing is that millennials are finally moving out to the suburbs, and they've been getting married and having kids, but now they're moving out there, and that creates a ton of demand for housing that may not be easily supplied in the short term. But I feel like a lot of the other inflation should subside over time.
But so, I'm kind of curious though on the housing front in particular. You would think rising interest rates in particular, has a very direct impact on kind of what amount of house people can afford. So while demand may be increasing, it seems like the amount that people could spend should be decreasing when you have 30-year mortgage rates going from, gosh, what was it, under 3% a couple of years ago to it's like 4.5%, somewhere like that now. I mean, that has a very real impact on how much you can spend per month, and I would imagine that creates some downward price pressure. But so, how do you think about, the millennials, that kind of longer term trend happening, coupled with rising rates, putting downward price pressure on homes?
I saw a calculation on Twitter. I didn't try and verify it, but they said with the mortgage going from 3.25% to over 6%, that it increases the monthly payment that people have to do by 40%, which is pretty substantial. And we already saw housing prices, seemingly go up in a lot of areas by, about 30%. So that creates problems over time, as most Americans have no savings. So when they have to move for work, they instantly have to pay more for housing, even if they've, paid off their mortgage or whatever. And that creates some lock-in to where people can be. People aren't able to move as much, and it can create some problems in the economy.
Yeah, I mean, the housing question in particular seems like a really tough one to pin down, because you've got all these trends that seem like they're at odds with each other. So, I mean, you just mentioned a couple of them right there, but then on top of that, you've got, remote work being more broad-based. I mean, it's certainly not, everywhere, but, remote work is more of an option than it used to be, say, a couple of years ago. So that may present a deflationary force in some cities potentially. If you can live in the the middle of Kansas and still work for a tech startup based in San Francisco, I mean, that seems like that's going to have some price impact locally in San Francisco. So you've got that, you've got mortgage rates, you've got while millennials are buying homes, that's true. But my mom, a boomer, just kind of downsized her house and got out of that into a much smaller, more manageable size house for herself. So to me, it seems like almost impossible to predict where housing in particular is going to shake out. But I think you're right when you look at inflation a little bit more broadly. I don't think oil is going to stay above 100 forever. It seems like a lot of the other commodities, excluding energy, those are starting to come back down to earth. I mean, you mentioned lumber is a big one. Some other ones like nickels, it seems like it has a little bit more staying power, but there's probably trends that explain that. But I'm curious, when you're talking to your clients about all of these, these issues and trying to navigate through macro, how specific do you get with some of these things versus just, kind of generic, buy and hold, dollar cost average? What advice are you giving to your clients right now?
Well, I believe it's very unpredictable trying to time macro and trying to figure out how everyone's going to respond to macro. And a lot of the time, things can just turn on a dime. Like at the end of 2018, we had that terrible December, and there's this bloodbath, December 26th, the day after Christmas. It was just horrible. And then in January, the media just stopped talking about it, and they stopped flashing red on the screen. And suddenly we had our best January ever or something like that in January of 2019. So I think it's really hard to try and predict it or try to incorporate much. So as a long-term investor, I try and ride things out. I don't practice buy and hold. So buy and hold in my mind is I think about the Warren Buffett ideal is you buy the stock and you never sell it.
Yeah.
or you sell it after 20 years or something. Where I think it's smart to be looking to add when the market goes down, whatever reason it goes down, whether it's the economy or geopolitics or hiccup in corporate America for some reason. We look to add when the market is weak, and then when things are super strong and people get euphoric, I'm looking to trim back, even if it's hard to do.
That's always the goal, right? Everybody wants to do that. It's very hard to do in practice, right? It's Emmett and I were actually back in November. We had a really strong month in the fund, and we were trying to come up with good hedges, and we didn't find a hedge that we thought had a good kind of like downside protection for a given amount of capital. And so, we ended up not putting a hedge in place, even though we were, kind of exploring it. And, in retrospect, that was one of our biggest mistakes we've made. So it's like wanting to do that and actually doing it, I think are two very different objectives. So yeah, how is that like? How are your clients reacting to the volatility right now? Are they panicked? Are they you mentioned a couple months ago, I think it was, that people were trying to exit Tesla, which you didn't think was a good idea at the time. So
Yeah.
how are you? I'm sure everyone's different, but maybe any broad takeaways you could share.
Yeah, I think in general, I think all of us are a bit shocked by how much the market has gone down, how much growth stocks have gone down. I guess like your deep value people are like, cheerleading
They're
all
claiming
this.
victory. Yeah, like Warren Buffett was right all along.
But it's when you pull back and look on a 3 and 5 year basis of where you were. If you talk to any Teslaanaire or anyone who's like all in on Tesla, you look back 3 years and it's a pretty significant change. And even if you weren't invested in one of the best stocks to be in the last few years, it's still like the market's up. I haven't looked at it in the last 3 weeks, but when I look last on a 3 year basis, the S&P was up 14%. And this was like 3 weeks ago, which is we're in a somewhat similar spot.
Yeah, probably a bit lower now, I would imagine, after the last week or so.
So when people look at the longer term, they tend to calm down. And even though I'm managing money, I feel all these emotions too. So it helped me to pull back and look at the longer term.
Yeah, no, it's good advice. Yeah, it's so easy to get anchored onto where you were, 6 months ago, but compared to where I was before I, really went all in on Tesla, it's like I've got so much to be thankful for. I really shouldn't be, fretting what I've lost. I should be, just grateful for what I have. But that doesn't make the volatility any easier to stomach at all.
Yeah. There's also this great long-term study that A Wealth of Common Sense. That's a blog by Ben Carlson shared, and it's a history of market drawdowns over 180 years. And what they found is, even though the stock market has done this over a long period of time, or like that, if you take off the log chart, if you look on a monthly basis, 70% of the time you're down from a previous peak. And it just creates this paradox. It's like, okay, if it's this great investment vehicle long term, why is it that 70% of the time we look and it's down? And if we look on a daily basis, it's like 50% of the time or something like that. So it's like, it's really hard psychologically to be a long-term investor. Yeah,
it is. And I mean, the last 15 years really of a little bit less than that of like monetary policy has just been, I think a lot of investors have kind of, grown up with, a current set of like, zero interest rate policy, monetary policy, and, very kind of supportive macro environments. And now a lot of investors are kind of getting their first dose of reality that, markets don't only go up. Of course, there were no shortage of drawdowns along the way, but it really has been a kind of uniquely long bull market. But speaking of 70% down, we don't normally go into crypto too much, but I'm curious, with the drawdowns being as big as they are, and Bitcoin and Ethereum, and you and I were tweeting a little bit about MicroStrategy and the danger that they're in. I'm just curious, what are your thoughts on crypto at this point, and how do you handle that as well with any potential investors? Do you guys get involved in that at all at Bradford Ferguson?
We have. So we had a small position in Bitcoin. We sold that several weeks ago. Crypto's been a disappointment. I thought it would be more of an inflation hedge, whereas like when the inflation story is really heated up, crypto, I think demand for crypto, if it is an inflation hedge, should have increased.
Right.
Like
that
the
narrative
price should
is
have
falling
gone up.
apart right now. Like
Yeah.
like this should be the time that if the maxis were right, it should be taking off, and it's clearly the opposite's happening.
And the other reason that we invested originally was I felt that adoption was only going to increase, whereas no major country that I'm aware of since El Salvador has adopted it in the way that El Salvador has, and so it's been a year, and no major company on the scale of Tesla, which few are, but even like respectively.
Yeah.
Away on the scale from Tesla, no major company has adopted Bitcoin or crypto. So like I my thesis for investing was broken, and so we had to sell at that point. I'm also just disappointed. I'm seeing just so much fraud in like all the stable coins and NFTs and Ether, and there's this great Twitter account that I follow called Web3 is going great or something like that, and it's they're negative on NFTs and all that. And they report on all the frauds that happen, all the Discord. When an NFT project's Discord gets hacked, they're reporting on that.
There's a lot of that. I mean, it's I think people talk about crypto in broad brush strokes, but I think there really are just huge differences. Like there's absolutely some outright fraud. There's some stuff that was just designed terribly. There's some stuff like Bitcoin. I think in Ethereum are probably not going anywhere in the long run. But that doesn't mean that they're going to be adopted by 50% of S&P 500 companies as like a treasury holding, like people were thinking a year ago. Yeah, in this horrible macro environment with stocks, the Gary Blacks of the world, I think are having the laugh right now at the moment of, I told you, this is not actually a growth asset, it's highly correlated to growth stocks, and it's not the kind of hedge that it has been billed as. So I don't think it's at all the end for crypto necessarily, but the narrative has certainly been damaged, and I think people's trust has been damaged with the Celsiuses of the world and the Lunas and all those. So there does not seem to be any bright spots.
There's a comment in the chat. I had some real life friends who tweeted about Web3 for about 3 times a day for months on end, and the past month they've been eerily quiet.
Yeah, we need Elon to come along with Web 69, and then it'll solve everything, right? Did you see that tweet he had?
No.
Yeah, something like Jack Dorsey tweeted something about Web 5, which I don't even know how. I haven't been following closely enough, but apparently he's launching something called Web 5. I don't know what happened to Web 4, and then like somebody was like, "Oh, like we need Elon to come along with like to make Web 69," and Elon just said like, "Oh yeah, Web 69 is fire." Just classic Elon. Anyway, sorry to
this brings up another topic I want to mention. Is one of my concerns is that I think we have this gambling culture, and I think crypto has accelerated it. The whole health crisis we had, and the sports gambling apps on the phone, I think have accelerated it. And I don't think it's a positive. I don't think it. I don't think it helps people. I think with personal finances, we generally want them to be a little more stable. Outside of your investments, what we want to do is get into a sustainable situation where we're not counting on hitting some kind of home run with crypto or with some six-legged parlay on a NASCAR race or something like that.
Yeah, so I'm curious to dive into that on Tesla in particular, because and I mean you've been I would say a vocal advocate of leaps in the past, long-term Tesla call options. That's certainly something we do here at Good Soil as well. But I think we always try to. There's a tendency to kind of use those things as a gambling sort of app, as you can look at all the people who've made millions of dollars and have retired and done really well. Like people just want to say, oh, I wanted to go do that. It's like I remember hearing stories of people just like, oh, I saw this Emmett Peppers guy, and so like I'm just gonna buy a bunch of Tesla Leaps and make like $30 million and retire. And I was like, whoa, no, like I don't think you actually understand what those are. Like though people who've been invested in those have been hit really hard, but at the same time, I do think that there's legitimate use for those if you know what you're doing, if you have the right risk appetite for them, because I think today's prices, depending on your risk appetite and everything, to me Tesla's fundamentals are being incredibly undervalued, and so in my mind there's opportunity there. But I'm curious what you think is how do you balance the kind of gambling with how aggressive do you want to be on things like leaps right now?
Yeah, I think you need to have some kind of discipline. Let me step away from leaps for a second and just like talk about margin.
Sure.
So I've heard of people who just stay at like max margin and have done it like for the whole Tesla run up. So basically what that means is as the stock goes up, they buy more as margin allows, and then as it goes down, they sell.
I don't have the stomach for that. Like, oh, that just stresses me out so much to even think about. Like,
that just seems like incredibly risky. I worry about these times where, from 2013 to 2019, at least early on in the year, Wall Street really didn't see the progress that Tesla was making. They essentially 10x the revenue. They launched some more products. They still weren't quite at profitability, but they were managing their losses, unlike some other companies we know about.
Right.
And the stock really wasn't rewarded. And when you're either using margin or you're using the leverage of options, that can be a way to lose shares over time, to lose wealth or lose money. I think long term, Tesla is going to be undervalued for a very long time, especially if they solve autonomy to the level they need to, and also especially if they figure out Tesla Bot, which I actually think Tesla Bot will be easier for Tesla to solve than autonomy.
Really? That's a spicy take. I would disagree with you, but I'm curious to unpack why do you think that's an easier problem?
Well, I'll admit I've been inspired by Connecting the Dots. It's another channel on YouTube. When it starts out, all that Tesla needs to solve is the environment of the Tesla Bot and a Tesla factory. So there's very few corner cases for perception for the robot. So they really don't need to. I gotta think it's going to be much easier for them to solve perception. And then, as they add more factories, as they sell it to other manufacturers, then that'll add some corner cases, but it's still going to be limited to factory. You can have a very almost pre-programmed environment so that the robot sees what it expects. Someone says, there's less at stake with the Tesla Bot. You don't have to worry about car crashes. Hopefully the bot's not going to attack our workers or, bump into or injure them, and Tesla's going to make things to prevent that. So I'm optimistic if they can figure out how to control the robot and how to incentivize behavior, then you can see some really cool things. Like you could see a scenario where there's maybe 2 or 3 robots working at the same time, and instead of like moving the parts, they could toss the parts to each other. So they could use things in code in the programming code to reward points for how quickly it happens, how how many robots it takes, how much electricity it takes, that kind of thing.
Yeah, yeah. I mean, it's interesting. I think it's going to be a harder problem personally, just because of we were talking about this on my interview with Emmett and Gary and Naveen on like Tesla's autonomy approach. But the Tesla bot in particular has so many more degrees of freedom. So instead of just accelerate, brake, in turn, you've got all the different variations of how can you do this with your hand and like screwing things in and how fast do you move and then on top of that, one of the things we didn't even get into, but I think is going to be a challenge is I think audio commands are going to be a really big component of the AI that they need to solve. So, right now Tesla is highly geared towards solving visual AI, but there's going to need to be, I think, a lot more build up of the kind of processing and understanding of audio clues. So like, the backwards beeping of a forklift and, just verbal commands that somebody will tell the bot to do. I mean, there's a lot of work that they need to kind of build from scratch on that front, but I'm optimistic on it. I just think it's like a second half of this decade kind of boost, but
yeah. And what I'd say that is the lucky thing is that I think the car business is undervalued by itself. I think you would agree with that, Matt.
I do.
And
I definitely do.
So even when autonomy gets going, if that happens, that's going to be undervalued for a long time. And then if bot starts going, that'll be undervalued. And the reason why I mention all this is it's one reason why you may want to use options. If you think there's going to be a strong catalyst. I'm not personally in options right now, but some people have leaps because they feel that Tesla profits will come through toward the end of this year and the end of next year, and that it'll almost force. Hang on, I got an alarm on my phone.
Lost your audio somehow, Bradford.
It'll almost force. Okay. It'll almost force Wall Street and the public to revalue Tesla when they see, profits may almost triple this year compared to last year.
I mean, that's the crazy thing, even with Q2 being, as, quote unquote bad as it really is. And that's the thing that kind of gets me is Wall Street just has this history of being horrible at guessing Tesla's earnings or modeling out the forward earnings. And I had a tweet this morning about just like Adam Jonas's like EPS targets are ridiculous. I think next year he's got like 12 or EPS of 12, which I'm like how do you assume that for
like they'll beat that this year?
Yeah, it's like he's actually assumed 2023 is a decrease in earnings, and I'm like, what is the logic going into that? 23 is going to be lower in earnings than 2022. So it's Evan Glansman says in the comments, even by 2030 he's only assuming $48 in earnings per share. So now he's just one analyst, but in looking at all the analysts, like the expectations just seem much too low in my mind. And so that was what really drove the turnaround in sentiment, the revaluation in my mind was, following Q3 2019, that was when Tesla first started posting like actual profit, and then they were generating real cash flow after that, and they like blew out analysts' estimates like every single quarter by a substantial margin. So now I think we're in this point where maybe things overheated a little bit too much. Again, none of this is investment advice, but just my opinion, it kind of looking through things. We were avoiding leaps last year because we thought things had kind of gone up maybe a little bit too hot too fast. But now it's like Tesla keeps beating my estimates, which I thought were aggressive at the time. And so it's like, all right, well, like if even the bulls have to revise upward, what does that say about, the actual stock price? So I want to move on to a couple other topics, but I do think their kind of core operations are really the only catalyst that we really need right now, even in a declining macro environment. You can't just ignore earnings and have Tesla trade at like a PE of a like a utility stock that's growing at 5% a year. It just to me there's some sort of floor where the market says, okay, it's still risky, but I can't ignore like a PE of 30 if it falls that low, or 25. I don't know where the absolute floor would be, but it seems like there's got to be some sort of floor.
Yeah.
But anyway,
let me say something real quick
Yeah.
with Leaps is that you can lose all your money with Leaps.
Yeah.
And you need like the public and Wall Street to agree with you. Or you need like more bulls to appear on the scene. Like I think a lot of Tesla bulls tend to be all in. So except for those who are still working and plowing new money into Tesla, they don't have more money to put into Tesla. So
yeah. We don't have another S&P inclusion. I think the options flow is lower than it was a couple of years ago. The macro policy is a lot different. So I don't think at all, there's a potential for like multi-100x returns going forward like there was a couple of years ago. But I do think it's at least possible that you could do pretty well there. But the safest thing to do is absolutely just to hold the stock. So I don't want this to be investment advice at all. But I'm curious, Bradford, you had I know you've been following the 4680 cell development stuff in a lot of detail. What's your thought on kind of the latest rumor coming out of Texas, and maybe reiterate that for those who haven't been following this closely?
Yeah, so the rumor is that they're making enough cells in Texas for about 1,000 cars a month, which would translate to 12,000 a year, whereas the nameplate capacity on the plant itself is 500,000 cars. So they would need to be working 24/7 to make the 500,000 cars a year. So I'd say it's a bit disappointing. But they have significantly grown the production since the last time we heard some more concrete news, which was when Tesla came out themselves and said they had produced the millionth cell at Cato Road. And so that took them 18 months. So now they're saying they can do 1 million cells in 1 month. So that's quite a big uptick in production. But yeah. Tesla just needs a lot more to expand. So it's a slight disappointment. I think the thing we need to focus on is that Elon and Drew Baglino have been pounding the table that battery suppliers are going to be able to supply Tesla with twice the number of batteries this year compared to last year.
Yeah.
And last year they made close to 936,000 cars. Tesla, it sounds like they're going to try and make 1.4, 1.5 million this year. So if their other suppliers come through, just forget about 4680 for the moment. They should have enough batteries to make from all the 4 factories they have.
Yeah, I mean we're at this kind of early phase of the S curve, and 4680 is new technology. So I mean I think we should be expecting something closer to kind of like Model 3 circa 2018 out of Fremont, as opposed to like Model 3 in Shanghai and in 2020. Like that ramp was so fast and so impressive. But this is new technology, so I think tempering expectations on the timeline of how long it takes them to figure this stuff out is probably the prudent thing to do right now.
Yeah.
Uh,
I did meet with someone who I just stood next to them while I was waiting for Elon to speak at the Cyber Rodeo, and they worked in what the area they call cell. So like all the battery people, that's what they call it. And they just seemed very optimistic about what Tesla was doing. Also, especially from a recycling and materials standpoint, they seemed excited about that. And Drew Baglino had good news about the recycling front in their latest earnings call, that they're recycling like 50 tons or something crazy already of battery material.
It is kind of surprising that they could be doing that much already, because I mean that's presumably from like older variants, right? Like how are they, like where's that 50 tons coming from? Do you have an idea of like, because that was what I couldn't figure out in my mind. Is that just like scrap material from the existing process, or is that from really old like Model S's from way back in the day?
I think a chunk is from 4680, but I'm guessing the majority might be from 2170 in Fremont.
Okay.
I think at best, Fremont's still at like 90% efficiency. For a long time, it was like shockingly still below 80%. I don't mean Fremont, I mean Nevada.
Oh yeah.
So when they have batteries that go bad from there, they can recycle those. I'm guessing there's some kind of deal between Panasonic and Tesla.
Yeah, that makes sense. So I'm curious too. We want to go to questions in just a second, but big news out of SpaceX with this FAA approval finally coming through for the suborbital flight. What do you think about that? And like, it's just, to me, it's so exciting to see the Starship. And we've had a couple of these small test flights, and those were amazing. But to get like a legitimate like high altitude flight, I personally can't wait. Or what's your thought on that news that we just got earlier this week?
I think it's great news that there's still a lot of steps ahead for Tesla. So the report cited 75 things
For
that
SpaceX?
Tesla. Yeah, for SpaceX.
It's early in the morning there. You probably haven't had your coffee yet.
I'm working on it. Yeah. So yeah, they cited 75 thing mitigation steps that SpaceX needs to do. I don't know how minor or major they are. I'm guessing they're somewhat minor on the scope, but they're also waiting on like approvals from other agencies. And as a little fuzzy on, it's kind of weird to hear the different agencies they're waiting on approvals for. And then after that, they have to get launch license. So it still may be a while. And it just reminds me that, over the short term, things don't happen as quickly as we think they would. But like when we look back long term, it's pretty shocking the progress that's been made. I think Starship and paired with Super Heavy booster will be really cool to see. There'll be a lot of FUD about it when it happens, because I think the first version of it, they're not even necessarily intending to land.
Yeah, there'll be some explosions along the way, which will be really exciting. But there will definitely be some FUD about those. Like, oh yeah, they're crazy Elon again. This is the guy that you've got testing self-driving software on the roads, and you don't want your car to blow up like his spaceship. Like, there's gonna be all sorts of that stuff. I am seeing something.
What's funny about this is, let me just say one more point here. Is like, I met with a guy who said, well, and this was in late 2020, he's like, SpaceX blows up all these rockets. They've blown up 4 or 5 of them. And I was like, dude, they've landed 48 straight at the time or something like that.
Yeah. And I think a lot of people don't realize like the primary mission is what's important to get right. Like what happens with the booster after that? Like that's just gravy if they actually catch it, because that means they can undercut on costs. But people don't seem to really understand the space industry at all is kind of my take. Like, yeah, I really think that the general public and even a lot of the analysts covering the space industry, I don't think really understand it. So I think that's good. There's going to be opportunities in that as that sector matures. I just did want to comment. There's a couple comments about Bradford's mic, at least on YouTube. We are doing this live on Twitter Spaces as well. So if you're having trouble kind of hearing what he's saying, I'd recommend switching over to Twitter Spaces. This is also being recorded. So if you're watching this later, you can just go over to the Twitter Spaces and find this. It's Going Live with Good Soil, episode 50. You can find it on there. Anything else you want to cover or touch on, Bradford, before we turn it over to Q&A?
Yeah, maybe just about the media. It seems like with headlines, the media plants these seeds in people's minds. And I just feel like in general, the public doesn't fully understand what's going on. And even if information is public on Twitter or even public around Wall Street, we can see the factories going up. We get these bits and pieces of public information. I don't think it's safe to assume that the investing public knows or understands what's going on. So I think that's one of the key aspects that Matt and myself are counting on, is that as people wake up to it, as the nearly 3 million owners of Tesla, can't stop talking about Tesla to their friends and family and coworkers and neighbors, like as all that happens, that word spreads. So I am using AirPod Pro today, so I'm kind of disappointed that my audio isn't going great. But the reason I mentioned Apple product is, I read the articles about Steve Jobs and how he was a very difficult boss, and you didn't want to get on an elevator with him because he, is likely to fire you by the time the elevator ride was done. And I didn't like iPhone when they came out. I thought people were using iPhones like as a fashion statement to show off to other people. But a couple of years later, I bought one, and I think a similar thing is going to happen with Teslas. People will figure it out over time, and they'll just understand better what great products they have.
Yeah, I think you're right. I remember, in 2019 in particular, when it took me over the course of that year, I was just invested in Tesla stock at the beginning of the year, and then I saw what they were doing, and the bear narrative to me just did not make any sense whatsoever. And I was like, it's possible I'm just super biased here, but to me this seems like total BS. And so then my conviction just kind of grew as the results kept coming in, and it was every single of the bear points, it was just Tesla knocked it down. It's nope, that's not applicable anymore. That's not there. And so then it was just there was nothing left for the bears to stand on, yet then it was fraud. It was okay, well, now we can't claim that the Model 3 is not profitable. So we have to say that the only reason that it's profitable is because there's fraud. And it's okay, well, how are they getting the cash in the door then? How is EBITDA positive? How is operating cash flow positive? And so, to me, it seems like a similar sort of thing right now, where there's this incredulity around FSD in particular, which I think is a near to medium term catalyst. Just as that's rolling out really widely, there's still a huge amount of discounting going on in that. And then even just Tesla's kind of base case profitability, all the analysts seem to expect that there's going to be a reversion to the mean coming forward. And to me, that just doesn't make any sense. If demand was falling, if you could order a Tesla and get it delivered today, I'd say, okay, yeah, there's probably going to be some margin pressure. But all the details kind of leading into the bull case, in my mind, have only been strengthened over the the last 6 months, even when the stock has been plummeted or has been just hammered. So, I mean, it is interesting to watch just see your own narrative either deteriorate or strengthen over time. And you were wrong on Apple. I remember thinking the same thing though, that when the first flip phones came out with a camera, I was like, who needs a camera in a phone? That's dumb. I think there's a lot of people right now are in that same phase of oh, you don't need an electric car that only gets 300 miles of range. That's dumb. But there's just a lack of understanding there that I think is going to turn. But anyway, let's move on to Q&A. We've only got 15, 20 minutes left maybe. So let's see some of the audience questions here. All right. So the first one is from Angad 1357. How low do you think Tesla can go, and what are the chances of it decoupling from macro due to rapid earnings growth? I don't know, Bradford, if you want to stick a number out there, but What are your
Yeah,
thoughts?
so in 2020, you know, when the stock was like $700, people said it could go below $400, and this was pre-split. And I just thought that was insane. Uh,
Uh-huh.
so I added to my position probably like around 550, but it got all the way down to below 400. I think it hit like 370 this one day, and maybe it was March 18. March 18th of 2020. Um, so it can go lower than the bulls can imagine. I don't think it'll go where the bears think. Just the earnings growth. I agree with you. I just have a hard time seeing Tesla get below a certain multiple in the middle of a year where they're going to triple earnings potentially, and then the year after that they may grow earnings by over 50%. I just have a hard time seeing Tesla getting below, honestly, like where kind of around where it is today. But um, the markets can shock us in the short term, for sure.
Yeah. Yeah. I mean, I kind of think the same thing. Like to me, for a significant decline from here to come, and I think Emmett actually has a different opinion. He thinks we could go even lower with no news, essentially. And of course we could go lower, but do we get to 300 or something like that? I think the only reason, or the only way we could kind of dip down that low is if there's, kind of continued like whiffs from Tesla. So if Q2 is way worse than we're expecting, and like guidance for Q3 is bad, like that could be, I could see the stock doing really poorly in that type of scenario. Or, if margins out of, Berlin and Austin really have much more of an impact than I would think they would, in a negative impact, then, I could see that, certainly dampening the bull case narrative a bit. So I think those are unlikely, but we have to kind of deal with the realm of possibility, and it's possible that the ramp could be way worse with those factories, or the cost could be way worse. So, I think to have a significant decline, though, you need something like that. Let's move on to the next question. All right, Evan Glansman asks, we're all familiar with Good Soil here and their convictions. Are there any companies outside of Tesla that you feel strongly about, Bradford, and have modeled?
Okay, so at Halter Ferguson Financial, we like NVIDIA as well. We felt that when we bought it that they could triple their earnings over 4 years, and that would help propel the stock higher over time. The main story with NVIDIA is you had these companies, they're called the hyperscalers. That's like Facebook and Amazon. They've implemented the technology from NVIDIA for AI, but what we believe is that large enterprises will be forced to use AI or become less competitive. So when implemented well, we believe that AI can reduce costs for business and can also increase value for customers. So I'll give one example. I don't think it's necessarily a case for AI, but we've all gotten like bad emails from airlines saying, well, you can travel to Tennessee for cheap, on this day. And like, some of us may have no desire to travel to Tennessee, even though the mountains are beautiful, or it might be Alaska or something. And
yeah, those $49 fare emails that you get every once in a while. It's like, okay, well, if on like Tuesday, October 13th, I want to go, then great, I can get it for $49.
So maybe that's AI, maybe that's just know your customer better. But I think if you can deliver better value to your customer, like Amazon has with, recommending products that others have bought, based off of your purchases, things like that. I think that's where the next main application of NVIDIA's type of AI is coming. They are doing a lot of other cool things in medicine, and they're trying to do stuff in autonomy and all that. But that's the main thing that we're excited about.
All right, appreciate that. Let's go to the next question. So Andrew Basile asks, if Tesla continues increasing auto production at greater than 50% CAGR, how soon do you feel they'll need to lower prices to capture enough of the market? Maybe not for quite a while if FSD is great. Yeah, so let's maybe go with the assumption that FSD does not drive sales, and then maybe we can talk about an alternate scenario at the end of that that's maybe a little bit more bullish. But what's your thought, kind of assuming static FSD development and take rate?
Yeah, so I had previously thought Tesla would need to start cutting prices as they scale Berlin and Austin. You essentially have Tesla adding 1 million per year Model Ys to the market. Like, that's pretty extreme. That's a huge amount of supply you're bringing onto the market. So I thought like they would need to cut prices by at least $5,000 to be able to do that. But we've seen a big drop in car sales with other car makers. So that's made prices fairly persistent and kind of shocked me. But I think over time that Tesla will continue to manage their costs well, and with increased scale will continue to drop their marginal cost, which will allow them to be able to reduce their prices over time while still maintaining profitability.
Yeah, I mean the crazy
so I
thing
think that's a good story, is like, even if they have to, even if FSD isn't as great for a while, I think they can maintain prices.
Yeah, I mean the crazy thing to think about was, they had over 30% gross margin in Q1, and so it's like they could just drop down to the industry average, cut prices by 15%, and they'd still have like 50% gross margins. To me, that's like kind of crazy that there's that much wiggle room. But like, because I was modeling, like back when the Model 3 was actually starting at like $37,000, or very, very close to that $35,000 mark, where it had, like, I was assuming that Model 3 and Model Y prices would decrease like from those levels of what was it, the average selling price back then was probably like 44,000, somewhere in that neighborhood. I was assuming like a 5 to 10% price decrease every year in order to kind of reach a higher level of demand. But instead, you've got like increasing supply and pretty significantly increasing prices too. And so it's this kind of surprising cocktail for margins, that demand is way higher than a 50% CAGR has been historically able to satisfy. So I don't know. As I'm thinking about this, I think like that trend can't continue forever. Like you can't just raise prices and raise supply by 50% per year and have infinite demand. Something's got to give in that equation. But at some point, but I think we're probably, it wouldn't surprise me if we're 12 months away or so from needing to do a price cut. Once you get through this big backlog that they have right now, and macro is looking a little bit shaky, so maybe that impacts demand a little bit. But then you cut prices a little bit, and then, like you were saying, your marginal costs have decreased. So maybe you can maintain a 30% gross margin or even higher, even in a decreasing price scenario. So that's kind of the way that I think about it. And then FSD, I do want to touch on the alternate scenario.
Let me add a little point. Is that I think electric vehicles are fundamentally a better product than gas vehicles. Like, the performance is great. You have supreme control over the car. I believe they're more convenient. You don't need to worry about going to a gas station. You don't have to sit and do oil changes, and then they upsell you on everything that's wrong with your car and all that. And like the safety and
the maintenance cycle on a Tesla is so much better.
The safety and technology are better too, in my opinion. So I just think that demand at price points may continue to surprise us for a long time to come.
There's a very real chance that that's true. I've experienced it myself. Just people don't know anything about an electric car, and they get in the Tesla and they're like blown away and they can't believe it. And then like I've been a Tesla fan long enough that I was kind of aware of it, but once I actually owned the vehicle and experienced it and was like got used to plugging in at home, it's like, oh my gosh, it's a total game changer. There's zero chance I'm ever going back to like an internal combustion engine car. It's just such a better product. So I do think that there's still a lot of ways to go on kind of convincing the general public that that's true. And as that process begins to take shape, and other companies are frankly struggling to scale their EV production, well, that may just force more demand to fall on Tesla's shoulders if they're the only ones that are capable of scaling, profitably. I worry about the Rivians and the Lucids and even like the Fords and GMs of the world who are starting to scale, but they're losing money on their cars. Like that's not a sustainable question either.
Yeah. Maybe you could talk a little bit about your upside tailwinds about like cars coming off lease and FSD take rates, some things like that.
Yeah. So the 2019 Q2 Model 3 lease, that was the quarter in which Model 3 leasing was introduced, and kind of infamously at the time, but really, smart in retrospect, Tesla did not give owners the option to buy out their vehicle at the end of the lease, at least for a predefined price. So Tesla owned on their balance sheet all these vehicles that they had to, assume some amount of depreciation over the 3-year life of that lease. So now they are in this situation where they've got vehicles coming off lease in this quarter. I forget the exact math of how many vehicles it was, but it was something like 8,000 or something like that, that are on their books for, I don't know the exact number, but maybe something like 26,000, maybe 30,000, somewhere in that neighborhood, I would guess, dollars on average for a Model 3. And if you go on Tesla's website and try to buy a 2019 Model 3, well, they're going for between like $52,000 and $64,000, somewhere in that neighborhood. Mm-hmm. So there's like an absolutely gigantic, maybe conservatively call it $20,000 markup after all the costs are considered, that Tesla is going to be able to realize on, I think it's not quite 10,000 vehicles, but it's some amount of vehicles. So you're talking about tens of millions of dollars of incremental margin, not revenue, but margin, that Tesla will realize if and when they sell these vehicles coming off of lease. And then the thing that gets really kind of nutty is you think about how that was like the early days of the Model 3 ramp. So every quarter, the amount of vehicles coming off lease is going to ramp exponentially. Mm-hmm. So that's just like a further kind of, tailwind for margins. So that'll show up in the services line. If I'm right, we should see a pretty decent increase. Maybe in services is close to like 0% gross margin on average. I think that may increase pretty substantially this quarter. I don't know, maybe 7-8%, somewhere in that neighborhood. But I'm really curious because I think most people are not expecting that. And then, I've droned on too long, but FSD also is another one that I've done some Twitter surveys, and those are not scientific, but looking at a lot of, the data on Troy Tesla's like Model Y tracker. And I think and actually talking with this company out of the Netherlands, Mr. Green, who actually owns a large fleet of EVs, and what they're seeing is their take rate for full self-driving is increasing right now, which is strange because like functionality in Europe is severely restricted. So that's kind of interesting. But anyway, putting all that together, I think there's reason to believe that take rate will be increasing, and I also think that there's a decent probability that there'll be some recognition of deferred full self-driving revenue in Q2, just because the beta program is so large now. So, recognition is one thing. I think analysts will discount that, but if there are indications that take rate is increasing, that could be very bullish as well, and present some pretty significant upside, I think.
So someone in the comments said 2 of the dumbest Tesla fans out there. I think they're talking about us, Matt. So like,
I think so.
Where on Wall Street do you hear someone talking about 8,000 Model 3s going off lease and getting Tesla at least $20,000 per car, and that's $160 million just in one quarter. There's no other Wall Street analyst that has mentioned this in their notes. So may want to reconsider that comment.
YouTube comments are always pretty hilarious. Like 90% of them are good, but then there's like some of them that are, I can't help but laugh. I was like, you know what? I've done so well on this, and I've got a pretty, I don't want to pat my own back too hard, but I've got a pretty accurate track record on not just like being optimistic on EPS, but I've been like very accurate on projecting Tesla earnings per shares. And Bradford, a lot of the stuff that you've been talking about has come to fruition as well. So people can call us stupid all they want. All I care about is like getting closer to the truth, and I think we're trying to do that. Let's move on to the.
Do we have to go at the hour, or can we keep going a while? Or?
Yeah, we can go. I don't know if Alec or anyone has a hard stop, but we can. Do you have a hard stop, Bradford?
I'm good for now. Yeah.
Yeah, maybe we can go 5-10 more minutes.
Alex says I'm good.
All right. Let's go to another question then. So, Sesha, if that's how you pronounce that, says, is Tesla pivoting from 20 million vehicles a year target to more AI focused as they anticipate raw material availability changes like lithium? It's an interesting question. Do you have thoughts, Bradford?
And my thoughts about the 20 million a year is I do think it can happen. What's also interesting about it is if they solve autonomy, a robo-taxi should replace at least 5 vehicles, at least 5 cars conservatively. So then the 20 million cars has the power of 100 million. Or if for whatever reason that's only 10 million vehicles, then that 10 million has the power of 50 million. So I think that's interesting. You definitely will have robots needing some lithium. I think they need much less. With the AI focus, I think it just multiplies the power of each car. What do you think, Matt?
Yeah. So I do think that Elon's language around the 20 million has definitely softened a little bit. And I think that the reason for that is because he's getting more confident on FSD and that robo-taxis will be like an actual reality now. I mean, there were those comments, I forget where I saw it, but they're actually planning to release, not just unveil, but release the robo-taxi form factor in 2024 now. Of course, that timeline it could very easily slip. So I don't want to, pin that down as like a, I'm believing that and bake it into my base case. I'm not. But if the economics of robo-taxi, do play out as I think they will, then I think you could still have 20 million vehicles a year. Your global fleet would be lower because you wouldn't need 2 billion vehicles that have like a 5% utilization rate or whatever it is. You'd need something like 400 million vehicles or somewhere in that neighborhood. But they would so then if Tesla's producing 20 million. And you've got a global fleet of 400 million, then you're kind of turning that over less frequently. So you could maybe turn over the entire global fleet every 4 years, and then so that would assume 100 million vehicle total global average, and then Tesla's got a 20% market share of that. So to me, like that math checks out. That could be reasonable. And then I think there's another interesting upside scenario, which I don't even want to try to model because I don't want to get into like these crazy Uber Bowl $100,000 per share targets. But there's a reasonable case that there's some elasticity of travel miles, and so like I've heard somebody put out the idea, which I hadn't thought of before, but like you could have like cruise ship type of scenarios where like people wake up in a different city every day, and there's some there could be greater miles traveled in a scenario where like the cost per vehicle or cost per mile is like 20 cents versus 60 cents, which it is right now. So I don't think it's going to be terribly elastic, but I do think there is some elasticity where demand for travel will increase overall as the cost undercuts the ICE cost right now. So, but that's into like Uber Bowl territory. It's like I'm just happy if they increase FSD take rate because that's a lot of good news for the stock. But if they actually solve autonomy, that's even better. And then if they're producing 20 million robo-taxis a year, capturing a share of the platform fee plus the upfront or subscription software fees too. It's like, well, that's going to be like better than I can realistically hope for, even though I do think it's a very reasonable outcome scenario.
Yeah. I think this reminds me of a point in general, is like, I think some of the Uber bulls, they take what Elon says, and because there have been times where either Tesla has just executed so well, or whatever reason, that they felt like Elon was sandbagging, and so they take what Elon says and then they add on to it. And
I've seen that. Yeah.
I think with how optimistic Elon is, I think it's a bit risky to take the view where you just kind of add units onto what Elon says. I think 20 million, it seems scary. Like it scared a lot of Wall Street analysts. They have a hard time thinking that Tesla will go beyond 10 million. And I think we just have a hard time imagining the future and being creative minded. And so I think that's like one superpower that people who understand Tesla have, is they're open-minded and have a good imagination and curious.
Yeah. I mean, you got to play out the scenario. Like, what was the likelihood that ICE vehicles are going to be over 50% of the of total sales by 2030? I think that's a pretty low likelihood. And then, like, who can actually scale EV production, with a product that people want? Like, I don't know who could do that besides Tesla right now. Like, the Chinese companies, I think definitely, like, a good chunk of the global market is going to be supplied by them, because they're frankly moving faster than just about anyone. But aside from them and Tesla, like, I don't know who's going to make it. So you just, like, thinking through the steps logically, like we were talking about earlier, puts you in this scenario where, like, 20 million, I think is definitely doable. But let's move on to another question. All right, Handyman IRD says, what do you think the sales of Tesla might be impacted by global recession versus possible higher demand of EVs due to oil price increases? So maybe a couple of grammar issues there, but I think what it's saying is, will higher oil prices impact
or global recession? Well, yeah.
Yeah, so oil prices are a tailwind, but global recession is a headwind, right? So how do you balance those?
Yeah,
I guess that's the question. What do you think, Bradford?
I think that Tesla has such a big backlog that they have plenty to work through. And even when you could get a Tesla in 2 to 4 weeks, which would be comparatively short, I think we'll see more demand for Tesla appear when that happens, because I think most people don't want to wait for a new car. That's just the way most people don't operate. Some people get like Tesla in their head, and then they can just wait forever for a Tesla. I know someone who waited 3 years for a year for a Model X.
Oh, wow.
Yeah. So, but when people don't have to wait, I think it'll unlock another level. So let's say oil prices came down and we had a recession, I'm not really concerned about that scenario either. And like, worst case is Tesla scales their 4 factories fine, and lowers prices by $5,000 or something like that. And their costs would come down commiserately. So, like, I don't think it would be that negative of an impact.
Yeah, and I still kind of take some solace in the fact that Tesla hasn't spent $1 on marketing yet. Like, we talk a lot about how I guess niche of a product this still is, that like awareness of EVs and Tesla is still like very low in general. So, I think that's one lever that Tesla could pull very easily. And you saw what an impact that had with GM spending on the Super Bowl. If Tesla just spends a little bit on some broad-based marketing like that down the road, when demand becomes a problem, when I don't know if it's at 4 million vehicles or 8 million or 2 million, but that's a very easy lever for them to pull that I think would have a very high ROI. So, yeah, I don't know. I mean, I was really expecting demand to be impacted by now, but it doesn't seem to be. I mean, in fact, order times are stretching out right now, which seems kind of crazy. So I can't help but be bullish on that, even as I'm kind of waiting for that narrative to change and kind of adjusting my own models and expectations accordingly. But let's maybe do one last question, and then we can wrap it up. All right, so FamNaf says, do you think factory capacity is 5 million annually by 2025 from Fremont, Shanghai, Austin, and Berlin? Is there enough demand for S3XY, the sexy and Cybertruck, to match that? What do you think, Brad?
Okay.
So maybe first part of that first. Is it 5 million out of those 4 plants?
Those 4 locations, yes. Maybe more buildings. The one building in Austin can do 1 million. When I toured there, was one of the most shocking parts was how empty the building still was. So there's room for 250,000 lines there. So an extra 500,000 a year to go with the 500,000 Model Y. So over the short term, we have Tesla going, they're adding 1 million Model Y, and maybe combine in Fremont, Shanghai, they do 750,000. But it's possible Shanghai is going, even higher on the Model Y.
I think they're trying to do 1.5 million total out of Shanghai, right? Isn't that the number most recently that was disclosed?
Yeah, so Tesla's going to be making possibly close over 2 million Model Y. So, Sexy and Cybertruck, they may need a compact by then, or the Robo-taxi. But I think there's much more room to go on 3 and Y that we don't know about, either due to lower prices or just getting rid of that order backlog.
Yeah, and when I think it's easy to forget about Cybertruck, but I think, just their backlog, their orders on that are so huge. So I don't know how aggressive they're going to try to go on capacity. So that's one thing I'm kind of curious about. Like, some people think they'll do 1 million units a year. Some people think that's super aggressive, and they'll do, because if you look at the total truck market, I forget what it is, but I think it's something like 3 million units, somewhere in that neighborhood. I could be off, but are they just going to take like a third of the truck market, or are they essentially creating a whole new category? And I don't really know. I have heard from supplier sources, though, that Tesla is bidding out for the new Cybertruck line in Austin, and apparently it's called Project Everest. So I don't know if that's an indication on capacity, or just how good they think the product will be, or what. But I thought that was a very interesting choice of names. That's what Tesla chose to call it.
I think demand for Cybertruck's going to be high. We don't know how many of these orders convert into real things. There are a ton of orders for people wanting to run Robo-taxi fleets, all that. I think the Cybertruck, when they finally make it, is going to actually be very triggering. Just the looks of it, and you have these things running around downtown cities. It's almost like tanks in the streets. I know maybe too soon for me to say that, but it's very triggering, and I think the Cybertruck is like a flex vehicle. So like a flex means look at me. It's almost like having a Lamborghini or a Ferrari, but it should cost less than 100,000. So I think demand may be surprisingly high. Australia, these things would sell like crazy. I'm curious if they're allowed to be sold in. I'm guessing China, they'd be fine, but I'm not sure about Japan or Europe. Delivery vans are allowed in Europe, so I don't know why Cybertrucks wouldn't be allowed.
What did Elon say? Didn't he say something like they need like a Wolverine or a Badger or something like that? A cyber Badger for like a smaller form factor Cybertruck for Europe? Because like it's big even for American streets. So I think like you've seen some of the small cobblestone streets in Europe. I think a smaller form factor might make sense there.
Or maybe they can put rubber pads on the corners too. People are worried about the edges of the Cybertruck. Yeah.
Yeah, interesting. Well, we should probably call it there. We've gone an hour 15, but Bradford, thank you so much for joining us. Episode 50. I can't believe it's been almost a year now. So really appreciate you taking your time and sharing that with us here. And I definitely appreciated it. And we'll have to do this again sometime.
Awesome. I'm going to hit up a lot of the questions and comments. I'll look to hit those up maybe in the outside the live comments so people can see them. But it's been good to chat with you, and thank you for the friendship that we have.
Definitely appreciate it. One of the smartest Tesla fans out there, not the dumbest, Bradford Ferguson. Thank you so much.
Thanks.